Fantastic. So thank you once again. I welcome all of you on behalf of Ryan Brucker for our webinar on taxation and how this affects every individual businesses. And as a brief, I would like to highlight the fact that UAE's e-invoicing mandate is transforming in a big way. The way business is being managed, the invoices are taken care, tax compliances, financial reporting, the whole gamut of VAT and the related e-filing is going to be addressed in today's webinar. What is so unique about this webinar? You have three key group under one umbrella, which is namely the tax experts on the domain. Second is the platform provider, which is compliance. Third is the system integrator like Ryan Broker. So it's a combination of tax experts from AMA. We have platform specialist on the invoicing. Third is a system integrator like Ryan Broker. So this three group would address pretty much any query and every query that is available within the e-filing. And pretty much, the tax experts, the specialists, and the finance IT leaders understand how the invoicing requirements, the compliance obligations basically going to take you through until they go live through the practical insights in the real world case studies that we have from similar regions, how you can have a clear roadmap and we can help you to prepare for the upcoming initiatives specific to e-invoicing, reduce the compliance risks and ensure a very smooth transition for the upcoming deadlines for phase one of e-filing. That's about the overall brief. So feel free to type in your questions during the webinar. We have dedicated the last 15 minutes for Q&A. If we cannot take questions, we would definitely come back to you with the individual answers based on your query. So feel free to keep your questions ready. So as I told you, this is a forum all under one roof, the tax experts, the platform specialist, and the system integrators, all in one available within next 1 hour field. Myself, Srikanth Ramakrishnan, I am heading the sales from Ryan Broker. We are the system integrators. I come with more than 3 decades of IT experience in delivery and sales operations. That's a very brief about myself. Today with me, joining Hari Krishnan. He's a CEO and co-founder of Compliance, who are providing the platform for e-invoicing here in GCC, adhering to the guidelines from FTA and Ministry of Finance, working with PayPal. They have done a fantastic job to set this up. Kindly welcome Hari to be on the webinar, and welcome Hari. Joining today with me, Karthik Reddy. He's the subject matter expert and comes with tons of experience in tax and domain experience. He works with compliance. He's a specialist in navigating UA's upcoming DCT CE 5-corner PayPal model and other models across the countries actually. So welcome Karthik as well. Next is our tax advisory specialist, CA Monish Mohan. Monish is a managing partner and CEO of AMA Global. Welcome, Monish, for the webinar. Monish comes with tons of experience in taxation, IFRS compliance, and statutory audits, and mergers and acquisitions. So welcome, Monish, for the webinar. We have Ajay Krishnan joining us, who is an associate director from AMA, comes with more than a decade of experience in VAT, specific to GCC countries. He's specialist in GST, corporate taxation, and other tax nuances across this region. So he's played very pivotal role in VAT implementation and compliances for multinational organizations for past so many years. So welcome, Ajay, for the webinar. We have Shiva Krishna, who is an associate director with AMA Global. He's a chartered accountant with a CPA Australia chapter member, and he's an expert in corporate taxation and specializes in UAE corporate tax, VAT compliances, and specifically regulatory advisory. So we welcome all the members, panel members here. Karthik would moderate the entire session. Before jumping into the webinar, we will take a minute each to explain what we do as an organization. Starting with Ryan Broker, we are a system integrator. We provide the technology integration with the different ERPs to compliance, e-invoicing platform. We come with more than 250 associates across Europe, GCC, and India. We are a German headquartered company. We have offices in Germany, Dubai, and India. That's about Ryan Broker at a glance. I would request Hari to take over and speak about compliance and what they do. Hari, over to you.
Thank you for the warm welcome, Sri, and a pleasure to meet you all. Thank you for joining this webinar. We at Compliance have been building tax technology for more than 5 years, and here in the UAE, we are approved ASP to provide e-invoicing solutions. And looking forward to this session. Uh, we have Karthik and our team from AMA. We're here to help you with any questions that you have. Please feel free to post them to us. Thank you once again, Sri, for the warm welcome.
Monish, one of you can pick up and speak about AMA Global, then we can jump and hand over the mantle to Karthik straight.
Thank you, Srikanth, for the warm introduction and a very good afternoon to all of you. So we look forward to have a fantastic section with a combination of a tax consultant, a facility ASP provider, and a warm experienced rainproof also. So over to the section, AMA have laid its footstones in 1999, completing 25 years within the UAE region, spreading to different verticals. And in the digital tax era, we would like to have a combination with compliance, presenting to you the e-invoicing, who is one of the most eminent ASP listed with more than 50 plus tax authorities within the region. And today's section, the aim is to tax agents also, Mr. Shiva and Ajay, both of them will be there to clear your queries, whatever it can be. I can say 360 corner of the tax and e-invoicing can be resolved in this meeting. And in case if there is anything pending, we can definitely take up this question also. So very happy. And on behalf of AMA, I welcome all of you to the section. Over to Karthik.
Gentlemen, thank you very much. Over to Kati. You can take this from here and set the context.
Yeah. Thank you, Sri. Thank you, Hari and Monish. It was a great introduction about the companies and our collaboration, in fact. Um, okay, now let's straight away dive into the e-invoicing basics, probably the current things that are going on in the e-invoicing and also new releases we'll try to cover in this webinar. So we have our experts, Ajay and Shiva, who will be picking up most of the taxation related questions and any technical aspects. Hari will be picking up and clearing your questions or taking forward this webinar. Let's get started. So yeah, as we all know, FTA has been steadily, or MOF has been steadily advancing in the invoicing mandate, leaving many finance leaders and ERP owners wondering what this means for the day-to-day operations. In plain terms, what is exactly the mandate, the invoicing mandate requires, and what does it apply to like different sectors, businesses, or sizes? And crucially, what does MOF enforcement and penalty looks like right now for the non-compliant entities?
So thank you, Karthik, for the first question, and I'll take up that question. So as you
Yeah.
can see, UAE has evolved into a new era called the e-invoicing. First, they introduced VAT, then corporate tax. Now, a new compliance requirement, e-invoicing, is in place. The UAE environment requires wants all the businesses to be still comply with each and every regulation. They are strict, but they are not very strict. So they have followed a phased approach in introducing the e-invoicing. So the rollout begins with a pilot phase from 1st of July 2026, which applies only to businesses specifically invited by the Ministry of Finance to participate in the testing framework. In addition, from 1st July 2026, all businesses, regardless of their revenue, may voluntarily adopt e-invoicing. Business choosing early adoption must comply with all technical and operational requirements prescribed by the MOF as well as FTA. However, the penalties will only apply from the date the businesses become subject to mandatory implementation. So now we'll proceed to the mandatory phases. So the first mandatory phase will apply to businesses with revenue equal to or more than 50 million dirhams. So these businesses must appoint an ASP by 30th October 2026 and start e-invoicing from 1st of January 2027. And the second phase, it covers smaller businesses with annual revenue below 50 million dirhams. So they must appoint an ASP by 31st March 2027 and start the e-invoicing by 1st of July 2027. Finally, the last phase is followed by government entities. This is the third and the final phase. They need to appoint the ASP by 31st March 2027 and start e-invoicing from 1st of October 2027. So these are the deadlines that you need to keep in mind, because if you are not complying with any of these rules and regulations, there is a hefty penalty coming. So if you miss to appoint an ASP by the relevant date, or you miss to start e-invoicing within the prescribed timeline, a penalty of 5,000 dirhams per month will be imposed on you. Similarly, failure to issue and transmit e-invoices or e-credit note within the required timelines may attract a penalty of 100 dirhams per invoice or per credit note, subject to a monthly cap of 5,000 dirhams. So the key takeaway all the businesses should keep in mind is that they should not wait until their mandatory implementation date. The voluntary adoption window provides an excellent opportunity to test the system, identify operational challenges, and ensure readiness before compliance becomes mandatory.
Great. That was like quite clear, including the timelines, phases, and the penalties. Um, Hari, like let's try to address, like we often hear that compliance window is narrowing. For a business that hasn't formally appointed any ASP or begun production testing, what does the implementation runway realistically look like to successfully hit go live? Or what are the operational risks waiting for them?
Yes, good. So, it depends on the case, how far the business is dealing with different transactions. As of today, we have 16 different transactions that will be impacted by e-invoicing set out by FTA and MOF. So we'll have to assess the nature of the transactions that the business deals with. This is one aspect. It also touches the existing master data that the business maintains, the master data of the vendors and the customers. There are different aspects. How we approach it is there are 5 different pillars that needs to be assessed in order to come up with a timeline. But then the usual timeline is somewhere between 4 to 8 weeks, depending on the size of the business and the complexity of the implementation. So when I mean complexity of the implementation, this will also involve the technical systems being used, the ERPs, the accounting systems where the sales and purchases are being booked. Right.
Got it, Harry. Yeah, that was detailed. So, as you said, like different businesses can have different transactions. So, like, let's now move on to the subject matter experts. While the framework, I mean, the invoicing framework touches upon numerous complex transaction types, let's simplify this for our audience. Like, what are the most frequent used transaction types that businesses must prioritize or businesses might be missing upon that you would like to discuss in this webinar?
Yes. Yeah, Karthik. Actually, there are 16 transaction types, as Mr. Hari mentioned in this slide question. But identification of this 16 transaction types, which all of the transactions will be applicable to a specific business, is the first task. Because we cannot blindly say like we are like only applicable for the standard data tax invoice. Like first of all, prior to this like gap assessment, as an initial assessment, but every business has to evaluate themselves what all are the transaction types will be applicable to them. Yeah, even not in the past, then we have to foresee the future also, because this invoicing is like carried down, or this like structuring will be carried down for the next coming year. Then we have to identify what are the possibility of having any transaction among these 16 transaction types. The most common transactions, like talking on a general note, it will be like a standard rated tax invoice will be obviously there, and then standard tax credit note will be there. Then like zero rated supplies will be there. According to the business and this business model, this transaction types will be varied. Like every business should review their transactions, and they have to like identify those transactions prior to the gap assessment. And certain transactional restructuring also will be needed, because as of now, like AR and AP processes, the approval processors, or like a validation processes, or a reconciliation like team has to work hand in hand to like change the process which is adaptable to this e-invoicing environment.
Got it. Got it, Ajay. Yep. So, as you said, like identifying transactions and taking care of an invoicing, every business would do this, but most of the businesses just consider invoicing as like generating an invoicing, submitting it to FTA or MOF, but they ignore or they are not, I mean, most of the people are not aware of the retention rules. So can you throw some light on retention rules and if there are any re latest updates on retention policies, probably the number of years that we should retain the invoice, and who should take care of the retention things?
Okay, Karthik, that's a great question. What you have mentioned is absolutely right. So people may think that generating an invoice, submitting to FDA, that's it. That's what e-invoicing is. So it is actually it's not. So basically, e-invoicing it's not just about issuing an invoice electronically. It is also about retaining them properly and make them available for the FDA when they come for an audit. So the retention period is similar to the what specified in VAT law. So most taxable businesses must retain e-invoices, e-credit note, and all the related supporting documentation for at least 5 years. But for a real estate related records, the retention period is 7 years. So basically, what you have to keep in mind is that 5 years for normal businesses, 7 years for real estate records. And apart from this, you may have to record or retain your record for additional 4 years if it's under FDA dispute or FDA audit. And the new guidance also clarifies that businesses remain ultimately responsible for all these records, even if the storage is outsourced to ASPs. So ASPs can store the records, but ultimately the legal obligation to retain and produce this record is with the businesses. Plus, there is no requirement to store the data in a specific system or location. Businesses are free to choose their storage solutions provided the records remain secure, maintain their integrity, and can be retrieved promptly if requested by the FDA. So the key takeaway is simple. E-invoicing compliance does not end when an invoice is issued and submitted to FDA. Business must ensure that invoice data is securely stored, easily accessible, and available for review throughout the retention period. So that's it. So 5 plus 7 years is the duration that you need to keep in mind generally.
Great, right, Shiva. Like, thanks for detailing the last thing, especially like about the 4 years additional thing and also the storage part that most of the businesses are still in an assumption that records needs to be maintained within the UAE, but it's not like as long as MOF or FTA can access it, I mean, through any audit, it's sufficient. Like that's quite detailed. Thank you very much. So moving on to our next part. So when it comes to invoicing, we have covered. When it comes to retention, we have covered. But there is a surprising part where most of the businesses are still confused. So let's say business A comes under phase one and business B is coming under phase two. Now we should actually reconcile both the parts like dual invoicing in this five corner model which is being used in UAE. So when business A is mandated to issue an invoice, but business B doesn't have any mandate to implement or adopt a invoicing, then how business or a seller should invoice this particular invoice to the buyer and also submit this to FTA? Like basically, what buyer details should be used in this case?
Yeah, it's one of the most like heard question during like our client engagements and all. While we are if one business is in a phase one and they are like counterparty, maybe the buyer or the supplier is on the like next phase, then there are chances of misalignment of receiving or like onboarding to this ecosystem of e-invoicing. Then as of now, like FDA in their guidelines is mentioned, if we are a buyer or like a supplier who is involved or who is liable to adopt this e-invoicing on the phase one, and our counterparty, that's our buyer, is not in the PayPal network because their like onboarding obligation and the go live obligation will be followed. Like maybe their revenue is below 50 million or it will be a government entity, then the deadline for their implementation is obviously like on the later period only. But as the specific business is like onboarded in the phase one, while issuing any invoice like e-invoice or tax credit note, they can use a dummy endpoint which is provided by FTA, and it can be used as like a payroll participant identifier to issue the invoices. And if our supplier is not on the phase one, but like our as a buyer, we are on the phase one, we will continue to receive the physical invoices as usual until they are on the same ecosystem of e-invoicing. Then to cut short, like anyone or everyone who is obligated to onboard this e-invoicing cannot skip their obligation to issue like tax invoice or tax credit note saying that the counterparty is not in the same ecosystem. It has to be followed because clear process flow is defined by the FTA, then all the business are like liable to follow this.
Great. Like this clears a major doubt because many businesses nowadays are considering this as a B2C instead of taking it as a liability to, I mean, obligation to submit to FTA. So yeah, that was detailed and clear. Thank you, Ajay. Let's also cover something like most Zatka or KSA customers are facing, which is like a neighboring invoicing mandate. So most of the Zatka customers or KSA invoicing taxpayers or businesses are confused about how to handle advance payments and retentions. So probably can you throw some light on how advance payments and retention should be managed in UAE?
Yes, there's a clear-cut guideline from the FTA mentioning this how to treat this advance payment and the retention. Because here in the UAE, there are a lot of like construction businesses are there, and they are having this contract invoicing, which is like far away from the normal invoicing of trading or like a service sector. It will be having advances. Which will be paid at the beginning of this like starting of the like a contract period, and the retention that will be released after the completion of work. Then all these are like addressed by the FTA, and as per the FTA, each and like for at the time of receiving an advance, there's a like supply happens in terms of VAT. Then at that point itself, they have to raise a tax invoice, and same for this retention. While we are releasing the retention or while we are receiving this retention, the obligation for tax invoice is like triggered there. Then FTA is not like leaving any point untouched. They are like puts on hands to every each and every like industry verticals to address the concerns.
Right, Ajay. Thanks. Because this was like an advanced taxing in case, I would say, because irrespective of the amount received or something, as soon as supply date is concerned, retentions and advance payment should be accounted in KSA. So that's why we tried to cover this in our webinar today. Okay. So anyway, since we have already covered the most edge cases like advance payments, retentions, and archival new releases. Let's also throw some light on intra-group transactions because intra-group transactions, like companies falling under same VAT group, now has some space to breathe or time to breathe for some time. So can you throw some light on it? Shiva, you're on mute.
Sorry.
Yeah.
So basically in UAE environment, as you see, there are lots of business group, like a group which contains multiple entities handling multiple businesses. So basically what people form, the main aim of forming a VAT group is to reduce the burden of this intra-group billing with VAT. So when you form a VAT group, all the intra-group transactions are out of scope for VAT, but it is not out of scope for the e-invoicing framework. So many large groups will have a significant volume of transactions between companies within the same group, including intra-group sales and purchases, service charges, bag charges, intercompany recharges, etc. So recognizing the complexity of implementing e-invoicing for each such transactions, the FTA and MOF have provided a 24-month grace period starting from 1st of January 2027. This means that from 1st of January 2027 to 31st December 2028, intra-group transactions between the same VAT group members need not be reported through e-invoicing portal. But the important thing to be understand is that this is only a temporary compliance relief, not a permanent exemption. So once the grace period expires, e-invoicing requirements will apply to intra-group transactions the same way as normal business transactions. So the key takeaway for businesses is to use this 2-year window wisely. Rather than viewing it as a postponement, it should be seen as an opportunity to review intercompany process, align ERP system across group entities, and ensure that they are fully prepared when the grace period comes to an end.
Right, Shiva. That was quite detailed and self-explanatory. I mean, people will get it clearly. Yeah. So, as we have covered mostly the basics of e-invoicing and the recent releases, let's try to throw some light on technicality where even though there is a separate circular on this, but I would say this is the most underrated circular where people are not at all considering. So, Hari, when business evaluate an ASP, what criteria should they actually look at?
Uh, yes, Karthik. So there are different aspects that any business should consider when they are selecting an ASP, right? So there are two different options in the market in if you see with the ASPs. Now some ASPs own the solution proprietely by themselves, and some have third-party solutions which are being resell, like sold here. So you have to, as a business, you have to see which ASP is holding the technology that they are selling, and to know what extent they can go and update those systems when there is a new change released by MIF or FTA. So this is one aspect which they have to see. And the second part is support and maintenance. So when it comes to e-invoicing, this is not a one-time thing, and this is going to be real time. Whenever there is a transaction in your business, e-invoicing is going to be a key, system in order to get those transactions compliant with the regulatory authorities. Right? So support and maintenance should be carefully assessed. You have to see if the ASP has local support to meet, to satisfy the regulatory aspects as well as operational challenges that they face. And apart from the apart from e-invoicing, you also have to assess what other offerings the ASP has. It may be relevant to e-invoicing, or it may be other additional services that they could provide. This is mainly to insist on the the key aspects, like for example, you see with e-invoicing, it is not only going to touch the e-invoicing layer. The VAT calculations that have been configured in the ERP is being assessed as part of the gap assessment. Whether we are charging the right VAT for the transactions that are being categorized by the MOF. So the ASP should also have capabilities from a tax standpoint to understand the business domain and then advise on their domain specific cases accordingly. Right? So this is one more aspect. The ASP cannot just be a technical solution provider. Right? And the system capabilities is another aspect where they have to assess the technical capabilities of the middleware system that the ASP is offering. Now, most of the businesses here, especially in the phase one, have multiple systems to book the sales and purchases. Right. So here the ASP system should be nimble enough to connect with those external systems that the business uses. So here the technical complexity goes higher when compared to a single system. Right. So this is again another factor that the business should look at when they assess a ASP. And apart from this, how I would categorize e-invoicing itself is into two different layers. One is the transaction layer. So you have to, the ASP should be, the ASP system should be quick enough to respond within the SLA set out by FTA for different reporting requirements at different corners of the five-corner model. So this is at the transaction level. Then on the archival, so every business should ensure they're archiving the XML data for a minimum of 5 years, and there are special requirements also. So that also this ASP system should be capable of accommodating the archival data historically, year after year. So this is another aspect they have to look at. And the final thing, Karthik, is the uptime and service availability, right? So this is a key thing. If even for a single hour the invoicing system is down, the ASP's invoicing system is down, there are thousands of transactions that any ASP is going to deal with in spite of the size. So this is again a key factor. We have to ensure when we assess the ASP, technically the system is being tested in other regions. I would suggest if the ASP has multi-region experience, the system would be mature enough, and then they'll have a better SLA even if there is a planned downtime. Right. So these are the key aspects that any business should look at when they're assessing an ASP, Karthik.
Right, Harry, got it. Like most businesses consider just cost as their primary aspect when selecting an
Right.
ASP, just underrating all these factors of system uptime and ongoing support, technical
Exactly.
capabilities, everything. So yeah, that was
Right.
great. So yeah, Harry, like from a business or system perspective, what does compliance actually demand from an existing ERP platform? Let's say, is this a simple configuration exercise or is it a deep live gap assessment required? Based on live projects currently underway in this region, what are the most common mistakes or most common technical teams, sorry, most common mistakes technical teams does during this initial assessment phase?
Right. As I earlier touched about the implementation timeline, so there are several aspects from which a business internally, the teams, the technical teams and the finance team will have to carefully assess. So one, as I said, the data, the existing master data, we have to find what is the gap with the existing master data in comparison to the regulatory requirements, the mandatory fields set out by MOF. For example, there are 51 mandatory fields required on any standard invoice, right? So one, data. Second, I would say the integration capability of the existing system. This is something the businesses underestimate. We have seen with our past experience in other regions. So, and there are multiple systems. We should carefully, structure how these invoices are going to flow with through the ASP system, and how mainly error situations will be handled. And there is a invoice, mainly the positive cases is what even ASPs also look for, but we have to carefully assess the negative scenarios also. For every transaction, there are 16 transactions. We have to look at a negative situation for every such transaction. Then third comes the AR and AP processes that the business follows. The current processes will definitely evolve to a new one. At least there will be minor changes, especially on the AP side, because invoices, the suppliers are going to share the invoices over the PayPal network going forward. It may not be a printed PDF or a email PDF invoice. So this is going to impact the AP side of the operations. And then the fourth aspect is how well they can train the team to adopt to the new e-invoicing processes. It can be it can be a process level change or a person level change. Both people and change management should be planned well ahead before the implementation. It should not be part of the implementation. And then the final part is risk and governance. When we assess, when we do the gap assessment, we also see who should own what after the implementation is live, right? When they have to track the invoices, I mean the reports, at what frequency should it be tracked? Should be monthly or quarterly? All these should be assessed, Karthik.
Right, great, Hari. Yeah. So, in this readiness assessment you have run so far in this region, where do companies consistently overestimate their preparedness? Like, what are the most
Right.
common organizational gaps teams blindly miss before launching their integration?
Right. So mainly with the current projects where we are, seeing, with the current projects that where we are doing e-invoicing, where we are doing the gap assessment, right? For these are companies where they have multiple line of operations into different verticals, right? So most often from the business perspective, if you see, the timeline required for implementation, especially the technical implementation, is often underestimated, right? So this is not a technical project. It is also going to involve the participation of the finance team, and a tax team if they are present, along with the technical team and along with the ASP and the existing vendor who is providing the ERP solution. So there are primarily three key stakeholders involved. Right? So stakeholder management and the time to coordinate between the stakeholders are often underestimated. So this will actually bite the overall implementation, timeline. So we clearly, as a ASP, we say these are the timelines that it will take for each particular step, depending on the size of the business and the nature of the transactions. Right. So that is how we are helping as of today, Karthik, by being proactively, addressing those gaps.
Right. Great, Harry. Probably let's try to end this webinar with one last question, and let's try to end this as quick as possible from our end, and let's try to open the window for Q&A. So many organizations in the region are running older and highly customized and completely legacy ERP systems. Will these businesses really need to completely update their own, entire systems, or how would it work?
Yeah. So, not necessarily, I would say, unless it is required after a preliminary assessment. So, as a ASP, we are doing preliminary assessments, even before we kick off the project to understand the nature of the business. I mean, nature of the systems the business uses, and then there are multiple approaches as a ASP we offer, right? In terms of integration for invoicing. Even if it is a legacy system, we have options to integrate with the ASP system through certain methods. And if there is a situation where even one of these methods are not applicable, that is when we have to look for an alternate option. Even in such a situation, Karthik, we have a manual upload option where we can, export the data from the legacy system and then do a manual upload for low volume transactions. If it is a high volume transaction, we have an automated upload, which is the SFTP system. Even in such cases, when there is a high volume situation and if it is a legacy system, we don't advise on for the advise the businesses to go with these certain approaches, depending on the case. There are situations where we also suggest the existing system to be updated to the newer version so that there are better integration approaches. For example, API integration may not be supported on an older version. And maybe, on a new version, it can be supported depending on the software the system the business is using. So for such cases, we advise if you update, you can actually save cost and also time, with the implementation. In some cases, we say you can continue to use the existing version. We have a smart integration approach, which will still continue to work even after, even if there are updates at the FDA end, it will continue to survive these things. Right. So this is what we are advising today, Karthik, depending on the case.
Right, Harry. That was great. We tried to cover mostly the implementation dates, basics, and mid-level questions that end user might have, and also the technical questions that any business would think of while appointing an ASP. Um, Probably let's try to end our part and let's try to jump into the Q&A. Hey, so we have a couple of questions. Like, let me just read out. Let me just try to pick it up. So, Shiva, I think you again have to take it. Would it be possible to repeat the deadlines so that we can make a note?
Sure. Yeah, great. So please take a note. So the first phase is the pilot phase and voluntary starting of e-invoicing. This starts from 1st of July 2026. And the mandatory phase is starting from 30th October 2026. So for businesses having revenue more than 50 million or more than 50 million revenue, they have to appoint their ASP by 30th October 2026. And the e-invoicing should start from 1st of January 2027. in this. So first deadline 30th October 2026, and e-invoicing should start from 1st of January 2027. Next, for the second phase, for the businesses having revenue less than 50 million, they need to appoint the ASP by 31st March 2027 and start e-invoicing from 1st of July 2027. The last and final phase is for the government entities. They have to appoint ASP by 31st March 2027 and start e-invoicing from 1st of October 2027. I hope this clears your question. I hope everybody noted it down. If not, I'll put it in the chat as well, the deadlines.
Yes, you are. We'll do that. Like, I mean, or if necessary, like we can reach out and we can send a mail.
Sure, great.
Yeah. So yeah, we have the next question. Like, should whole group can have same PayPal ID, or how to send invoice to specific member of a group? Okay, I'll try to take this question. Um, so yeah, whole group will not have a same PayPal ID. Actually, each individual member of the group will have different PayPal IDs, and these PayPal IDs will actually be created based on the individual member's TIN number. It's not actually the TRN. It's the TIN that forms the basis of PayPal ID. So based on this TIN and PayPal ID created, you can target a specific member of a group and send the invoice. Yep. So, can we pick this? Like, can you please explain how e-invoice will work for hypermarkets, e-commerce platform, and hypermarket sales through aggregators?
Yeah, I will take this up. Then there are three scenarios. One is for the hypermarket. As we all know, the major chunk of this like invoicing for hypermarkets, which is like outgoing, like their outgoing invoices will be B2C invoices, not B2B invoices. The B2B invoices also will be there because if they are like selling to any other businesses, as we some businesses is consuming their like goods, then it will be covered as a B2B. Then as of now, as per the FTS mandate, only B2B like and B2G transactions are in the scope. But like lately, like maybe after 1 or 2 years, B2C transactions also will be coming into play. But it will not be on not on the same five corner model. But as of now, for hypermarkets, whatever they are purchasing, like if it's from a local purchase, it will be through the invoicing ecosystem. And the same time, if they are selling to any specific businesses as like a B2B supplies, that will be in the scope of invoicing. And same goes for this e-commerce platform also. Like if an e-commerce platform who's like a Noon and Talabat and like a Karim and all, they'll be also having like B2B and B2C supplies. Then accordingly, first we have to like segregate what all are the B2B transactions, how we can identify in their ERP, B2B and B2C transaction. Then accordingly, this applicability will be enforced. And like for hypermarket sales through aggregators like Talabat. That also, like if a hypermarket is selling to like through Talabat, then different businesses are like following different methods. Maybe that aggregator will act as an agent who is like delivering the goods behalf of this hypermarket, or sometimes this hypermarket will be purchasing from like when and like their when and their like customer is ordering through their platform, the customer like hypermarket will purchase from this specific hypermarket, and then this e-invoicing platform like e-commerce platform will be purchasing from this hypermarket, and they will be reselling to the end customer. Then we have to identify what all are the points there is a chances of confusion, then we have to rectify accordingly.
Right. So, just in relation to this, we have one more question. I think a small thing. So, I'm just adding it here. So, is invoicing mandatory or compulsory for B2C or only for B2B and B2G?
So I'll take up the question. So as of now, only business to business and business to government transaction, that is B2B and B2G, is covered under e-invoicing. If a business is doing only B2C, like exclusively B2C transactions, then they need not appoint an ASP, they did not comply with the invoicing. So, and if you have B2B as well as B2C, only the B2B invoices should be transmitted through e-invoicing. B2C will be continuing as such. Currently, what you're doing, the same will follow.
Got it. So there is one more question similarly. So good afternoon. If a customer or supplier is not registered for VAT, how e-invoicing works? So basically for non-registered
Yeah. First of all, we have
businesses.
to understand it's not linked to VAT, but it's just like another mandate. There is like a misconception in the market or in this industry saying that like only VAT registered business need to issue this e-invoicing, or they are only liable to follow these guidelines. But it's not the case. Every businesses should implement e-invoice, like irrespective of their like VAT registration status. Then, if that even if that like business is not registered for VAT, they will be allocated a TIN number which can be used for this ASP selection and ASP linking.
Got it. Um, so I think we have fewer questions, but we are running out of time. So shall we continue, or shall we just take these questions and reply
So we
on
can continue.
emails?
We have like an hour actually. I mean, rather 15 more
Oh,
minutes. We can do that. Yeah.
okay. Thank you, Sri.
Yeah.
Yeah. So yeah, I think we covered this in the webinar. It's the same question more or less. Like, what if the buyer revenue is less than mandate revenue and not registered for e-invoicing and PayPal ID? Then how to issue invoice to such a buyer if it is a B2B transaction? So basically, the domestic B2B transaction where buyer is not under e-invoicing mandate.
Yeah, in that case, if any of the counterparty is not in this PayPal PayPal network or not onboarded to this invoicing, it will not be like an excuse for not like issue a invoice to that like a specific party. Instead, they can use like if our buyer is not like registered for invoicing, we can use that like endpoint ID that FT has provided. And if our buyer is not onboarded to this invoicing, then we will be continue to receive this like physical copy of invoices or the traditional like invoicing method unless they are in this like invoicing ecosystem.
Got it. Okay. So yeah, next question is like, does UAE invoicing facilitates triangular sales or like bill to ship sales, basically? I mean, bill to ship to sales. So basically, I think user wants to ask about when the buyer details and delivery details are different. So yes, actually UAE invoicing facilitate this. So we can use buyer profile or buyer section completely for buyer details, and there is one more section for delivery details too, which MOF has provided for, I mean, for some placeholders. So you can use these two details or sections and fill the buyer details and the delivery location details and submit this invoice to FTA or C5. Fine. So let's scroll. Okay, continue. What happens in such case of export sales or okay, there is one more question. What happens in case of export sales or import purchases? Import purchases from GCC and rest of the world.
Okay, so I'll take up this question. So for the imports, let it be from GCC or from anywhere in the world, import transactions are not currently covered under e-invoicing. So there is no requirement for reporting for e-invoicing the import transactions. For exports, similarly, just like a person in UAE who doesn't have who doesn't mandate under e-invoicing, similar to the case, in case of export, the buyer is not registered under UAE and he may not have a TIN number or TR number, or he may not be appointing any ASPs. In that case also, the FTA and MOF have provided a dummy number, TIN number, which will be mentioned in the export invoices. And as a seller, we need to submit the invoice to FTA with this dummy number.
Got it. So there is one more question. the TIN numbers are the same numbers which we get in the initially at the time of VAT registration.
No, TIN number is a different number. So the number that we initially get during the VAT registration in our VAT certificate is the TRN number, tax registration number, which is a 15-digit number. TIN number is a unique number, which is the first 10 digit of the TRN. When you log into your Emirate Tax account, on the bottom left, you can see a tab called E-Invoicing. When you click that E-Invoicing, you on the top you can see the TIN number generated, which will be mostly your first 10 digit numbers. If you don't have a VAT registration, if you don't have a CT registration, still when you click the E-Invoicing and when you try to link the ASP, unique number will be generated in your name. Generated for the TIN number to have a link between the ASPs.
Got it. Okay.
So we can take two
So,
more questions, Karthik. I think last two. With this, we'll be hitting our milestone. Last two is there. Yeah.
yes, right. So yeah, Sri, so the next question is, can we do all these things without an ASP? So let me try to pick it up. So as of now, MOF hasn't given any free portal for users to utilize and submit the invoices. They have mandated to use ASPs. But yeah, even though you have to appoint an ASP, you still have 100 free invoices per year to test your invoices or to submit before you just confirm with the ASP. It's like it's a MOF mandate that they have given. So the straight answer to the question is no. Like you need to appoint an ASP for e-invoicing or any operations related to e-invoicing. So yeah, the next question is the current company turnover or prerequisite of AED 50 million is for the respective legal entity or its combined entity, combined for the group.
Yeah, I will take the comments. And actually, this 50 million threshold is for each entity. If we are having a tax group for VAT, then the combined turnover will be more than 50 million dirham. That is not like a those companies like those group or like as a group they don't want to they don't need to appoint an ASP unless any of this specific because this ASP selection is happening at the entity level, then we have to analyze what is the turnover for the recent last financial year. If it's more than 50 million dirham, they have to appoint in the first phase itself.
Got it. Sri, can we just take up one
we
more
can
question?
take the last one and we can close it. Yeah. Thank you, Karthik.
Yep. Thank you, Sri. So yeah, Hari, will you be able to take this? Like, is service provider have any criteria to choose? How can we choose it, or how safe to share our data this to a service provider?
Yes, Karthik, I'll take this up. The criteria to choose a service provider, I have been briefing the earlier this session. I'll first touch the second aspect and the data security. So, as per the Ministry of Finance approval process, every ASP has been approved by the Ministry of Finance after certain eligibility criteria that has been met by those ASPs. And one among those criteria is the data security part, where every ASP should hold a ISO 27001 certification to ensure the platform is secure from a data standpoint. This is the minimum requirement, right? And there are other data security related requirements set out by the Ministry of Finance. So this is, something that every ASP will hold, and as a minimum thing. But compliance as ASP, we on top of the ISO certification, we also have SOC 2 Type 2, SOC 2 Type 2, which is one of the key data security frameworks that has been adopted widely by most of the service providers, most of the software providers. We are accredited. I mean, we are SOC 2 compliant, and apart from this, we are also GDPR compliant in the Europe in terms of data security. So I would say as a ASP, we have all of these. Like when you choose a ASP, you'll also have to ensure any ASP that you choose, make sure they have these certifications in place. And beyond the certifications, you can also check the track record of the ASP to ensure whether they have been operating in the invoicing business for at least few years and have experience in other regions in the past and have been selected by the large enterprises, because usually the large enterprises will have the security check, and the service provider can show that as a proof in the other regions where they've been operating.
Hey, thank you, Hari. It has
Right,
been a
right.
fantastic evening and fantastic responses. Those questions we couldn't pick up, we will take them individually and come back to you over email. And thank you for joining us. Feel free to drop in your questions or any other inquiries through the website. We will be glad to come back to you. Should you wish to engage with any of us, write to us. We can provide you a gap analysis, feasibility study, and help you to mitigate over the e-filing, e-invoicing related activities. So thank you so much. With that, we close our webinar for today. All the panel members and the attendees, wish you a great evening. Thank you so much.
Thank you. Thank you all.
Thank you very much.
Thank you
Thank
all.
you, everyone.
Bye-bye.
Bye.
Thank you. Bye.